This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today is Friday, the end of a pretty crazy week where I made a shit ton of mistakes. I had one solid setup, literally one solid setup the entire week that basically covered all the losses that I took for the most part. And I took, how many losing trades did I take? Let's take a look. Let's go to filters or date range this week. Guys, I took 8 losing trades this week, which is crazy. This is crazy. I usually do not trade this much at all. I'm usually one and done or nothing at all. If we take a look at last month, it's quite literally the exact opposite, right? Last month, I did not have 1 week where I took a trade every single day. Today, I took a trade every single day. Why is that the case? Well, after the end of today, it's very clear to me that I am lacking the ability to separate myself from the charts when I know I'm not in a good situation, when I know I'm in a situation that usually leads to mistakes. I hang around and I try to make something out of the session, even though I know if the market's already gave me what I'm looking for, or maybe the session is just not presenting an ideal condition, I shouldn't trade it at all. I hang around, I really want to make something out of it, and it just leads to doing more damage. Now, yesterday, that worked. Yesterday, I reflected on the loss that I took, saw my model there in price, and I took it, I executed it. That's good. Today, the market delivered what I was looking for, and it was already over. Basically, I couldn't find a way to get on side with the move, and I missed it. Delivered Thursday daily high, and that was it. But what did I do? I stuck around, which is a situation that I've put myself in so many times and has led to this exact outcome every single time where I just take a second losing trade and hurt myself and do even more damage. So, let's get into it. View my day. So net P&L today down $585. Not ideal. Not ideal to take 2 losing trades on a Friday going into the weekend. After I had a nicer rebound yesterday, finally taking a solid setup. So let's look at how I approach the day today. So what's the drawn liquidity? The overnight range buy side and Thursday daily high. What is my bias? The higher time frame narrative. I'm using the development of the weekly range because it's clearly bullish. I like how Thursday rebalanced Wednesday's range, produced a reaction off of Tuesday's down candle with strength, and the drop down Thursday was also very high resistance, indicative it's not the real move, while the push higher is low resistance. Since Thursday has rebalanced Wednesday's range and this profile is bullish, it makes sense to see Friday push up towards Thursday high. So, let me just put the logic on the chart behind that idea right now. So starting the development of this weekly range is clearly bullish. By the time it's Friday, we now have the rest of the week behind us. We can see what Monday, Tuesday, Wednesday, and Thursday did, and we know that by Friday, this weekly candle is probably going to close on its high. Why? Because if we go to the daily chart, we can see what we did. Because Monday was a large up-close candle. Usually when Monday is a large day, that settles on its higher low. That marks the higher low of the week. In this case, Monday, large up-close candle that settled near its high. So this weekly range is likely to be bullish. That's probably going to be the low of the week. Tuesday, rebalance Monday's range. Wednesday open, dropped down, took Tuesday's low in a discount of Monday's range. If we frame that real quick, like that, and also settled near its high. So that's very bullish. Thursday open initially was an overextension of Wednesday's impulse swing, but then dropped down to rebalance Wednesday's range. We could also see that it tapped. Tuesday, which is a down candle, which forms an order block on the daily time frame, which sets up the move higher on Friday. So at the end of the week, when the weekly profile is clearly bullish and we see Thursday retraces Wednesday's range, that usually sets up continuation on Friday. I'm sure everybody and their mom was looking for longs today, and that's what played out. That's what I was looking for. I'm explaining why I missed the move and why I wasn't able to be a part of it. So on the 4 hour, we're clearly bullish, right? We tapped this gap. Here's Wednesday's range from this high. This is Wednesday, 6 p.m. So here's Wednesday's range, right? Just frame this out real quick. Wednesday's range, Thursday, is given overextension of this impulse swing first, then it drops to rebalance that, taps this gap. And then in the overnight session today, we see this consolidation. But if we go to the lower time frame, we can see that we have market retraction in the overnight session. Boom, boom, boom. Aggressive down move, comes back inside the range. Slight impulse swing. Look what pre-market does, though. It does not take Asia's high. It leaves them perfectly equal. So now what does this look like? A double top. When the market turns away from that, that's just engineering the idea that the market is weak and it's probably going to go up lower. It's just building short interest in the marketplace to engineer buy-side liquidity above these highs. So pre-market drops down, clears the sell side here, does not need to take the overnight low because we've seen this aggressive market protraction. Boom, 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 down, back inside the range. Pre-market takes the sell side here, respects the new day opening gap. The body's closed above it. That tells me it's strong. And then we just leave right at 9:30. So I'm going to explain why I missed this move, why I wasn't able to be a part of it. This is how I wanted to see it play out. Obviously, I framed the idea that played out today exactly, but how I wanted it to play out was not what I was looking for, and that kind of led to this confusion intraday. So how is it going to get to / trade around the draw on liquidity? How is it going to get to, what I'm asking myself here is, how is it going to get to the overnight range buy side and Thursday daily high? So ideally, price drops down and takes the low of the overnight range first to rebalance the impulse swing off the daily order block, then shows me that it's respecting the 1 hour / 15-minute buy side imbalance, sell side and efficiency. So what I wanted to see, because I thought this was, looking on the higher time frame, right? If we go to the 4 hour, this basically just looks like a consolidation range. All these candles just overlap each other. On the hourly, kind of the same story as well, but if we look at the details, on the lower time frame, we can see that this is a protraction profile where we see protraction in the overnight session, then the market aggressively pushes back inside the range. So this is going to be the low a day. This is a protraction profile. Now I thought it was my range play playbook. It wasn't my range play playbook. It was my market protraction playbook. In my range play playbook, I want to see the market drop and take the low of the range. That's what I was looking for. I was looking for 9:30 to open and drop, make a new low a day, rebalance to this gap right here. That's in congruence on the 15-minute and the hourly. It's also there on the hourly, right? I want to see it drop down first, but it didn't do that. It just left. So we could read my idea again. See, ideally, price drops down, takes a low of the overnight range first to rebalance the impulse swing off the day of the order block, then shows me it's respecting that hourly 15-minute buy side imbalance, sell side efficiency I just mentioned. So my main idea was range play. My range play playbook, looking for price to manipulate the low of the range first, then go for the high of it. So that was my mistake. My mistake was I simply just misinterpreted the profile that was setting up. I had the right higher time frame narrative. What I thought the market criteria was actually incorrect, just slightly wrong. And that's why when the market left right at 9:30, it's kind of hard for me to trust that because I was looking for a drop lower initially. It didn't do that. It literally just went. It just went. But reviewing in hindsight, and I noticed this right before the open because I looked at the S&P. If we take a look at the S&P, we can also see that the S&P, this doesn't really look like a consolidation range, does it? No. In the S&P, we can clearly see market retraction drop lower and then come back inside the range. We rebalance that range, rebalance the overnight swing pre-market, and that allows the market to run right from the open at 9:30. So I look at the S&P and I was like, oh shit, this doesn't really look like a consolidation range. So is it going to drop lower, take the low, make a new low a day, rebalance these gaps, and then trade higher? No, probably not. If it is my protraction playbook, it's going to rebalance the overnight swing. It's not going to make a new low day, and it's going to allow the market to run right at 9:30. In this case, the market does run right at 9:30 because it already cleared the sell side here, shows willingness to react off the new day opening gap, and then it just goes. So because that happened, I was a bit confused on what I wanted to see, which led me to miss the move, okay? First 5 minutes, open at the low day and is working for buy side first, which is not optimal. I'm saying this because I wanted to wait for that drop down. Wait for drop down. So I'm telling myself, just wait for the drop down. Sell side below the range is left also very smooth. And then at 9:40, this is where I start to get a little bit frustrated with how the market is delivering because it's not giving me what I was looking for. And I could feel the frustration. I was able to bring awareness to that and work to fight that off and keep myself focused on price, not focused on why is the market not doing what I want it to do. Because that does nothing for me. That just keeps me in a negative state, a low frequency state of mind, and that doesn't do anything for me. I need to stay in a high frequency state of mind. I need to be focused and high energy and focused on what the market is telling me to do. So it delivered my draw on liquidity, but in the opposite way I intended it to, and it didn't give me a reason, or it didn't give me a means to buy it that made sense for me. I feel myself wanting to be frustrated, but what does that do for me? Nothing. Shut the fuck up. Keep watching and wait for something that makes sense. I'm on edge in this kind of situation. I have to wait until I know exactly what it's going to do. My best move here is to wait for a 10 o'clock open low or open high if information changes, to be patient. So at this point in time, at 9:40, the market is left. I wanted to drop down first. It didn't do that. So now I'm thinking, okay, fuck, what am I going to do now? I'm looking at the potential for the market to present a 10 o'clock open, low, high close. So at 10 o'clock, I want to see the market drop down for the hourly range, how it's going to paint. I want to see the market open, drop down, build a low, and then trade high, close near its high. So open, low, high, close. Go to the 1 minute. And this right here, as the market left the overnight high from the Asia session, this was a clear buy. This is a clear way for me to get onside, focused on my draw on liquidity that you can see that I clearly said it in my pre-market plan was 30-day daily high. So why can't I take this setup? Why can't I get onside with the move? That's one of the mistakes that if you've watched my videos consistently, you know I keep repeating this mistake. I keep missing the move because I'm just simply not confident in my ability to get onside with it, or I just don't do it. Like, I literally just don't get onside with it. I'm not sure why. There's plenty of range between this setup. This is a fresh new gap that formed that allows me to frame risk that makes sense for this trade, and I can target the draw that I was looking for a 3R. So why am I not taking this? This is worth the risk. There's nothing to be afraid of. If I stop out, guess what? It is my model. I'm playing in the direction of my draw on liquidity, and the risk was worth it. So it makes sense. This checks all the boxes for me to at least try this setup. But at this time, I told myself that I wanted to wait for the 10 o'clock open to see if it gave me like an open, low, high close, okay? So I missed this setup, and what does that lead to? The market keeps trading away from this. And this is a situation that always repeats, that always makes me make mistakes. When the market delivers what I'm looking for, but I'm not able to be a part of that move. What does that lead to? Bad trades where I'm trying to get on side with the move. It just leads to impulsive trades that just don't make sense, or the risk doesn't make sense at a location that does not make sense because I've missed the move and now I'm just chasing price. And if I still stick around after that, now I'm just looking to fade the move that I was looking for coming into the market today. Now I'm just looking to fade my bias in its entirety. So I took a long, stopped out, took a short, stopped out, because I took a long at a location that sucked, that didn't make any sense at all, because I wasn't able to confidently get on side with the move and trade in the direction of my draw on liquidity. So what did I do? I bought at the fucking high day. Pretty pathetic, right? I bought the high of day. What are you doing, bro? What are you doing? So I wanted to look for the 10 o'clock open, low, high close. 10 o'clock open. I'm like, oh shit, 10 o'clock. Oh my God, it's 10 o'clock. Okay, here we go, lock in. Down candle, up candle. Okay, buy it. At the high day. Dude, come on. Okay, so this trade is influenced by the situation where, number one, the market doesn't really deliver as I'm looking for. And then number two, I'm not able to get on side with that move. It influences me to put a trade on in a location that just does not make sense. Okay? So I was looking for Thursday daily high. Y'all know that from me reading my pre-market plan. It delivered right here. Boom. Okay, cool. That's it. I should be done. Walk away. The market delivered your plan. You weren't able to be a part of it. What else do you want to do this session? Oh, let me just stick around and, try to catch the other side of the market. Okay. I liked how this candle traded up above that candle's high but closed below it, and then boom, large down candle, obvious gap. I took that. Also showing my entry mechanism on the 15-minute time frame. It shows my entry mechanism, but is it my entry model? Or is it my model? No. The entry mechanism is there, but is this my trade model? No, it's not. This is not my trade model. I don't have a trade model that says, hey, I'm going to wait for the market to rally up in the morning session, and then I'm going to fade it and take it the other way if I'm not able to be a part of that move up. No, I don't do that. So this is not my model at all. So if we go to the 15-minute time frame, basically how I frame ideas is looking at the higher time frame candles, 15-minute and 1 minute, or how I frame entries, looking at higher time frame candles, 15 and 1, seeing how they close, and that tells me if the market is strong or weak. We can see on this 15-minute candle, dries up into the new day opening gap, close below it. Okay, it's looking kind of weak. Second candle, trades above this candle's high, close below it. Okay. On a third consecutive candle, traded up, but close. Now I took the short before this candle closed, which is also a no-no. I took this trade premature because I had to wait for that higher time frame candle to close to actually confirm what it's telling me, to actually confirm if it's bullish or bearish, because the candle could be open painting like this and it could still close on its high in like the last 1 to 2 minutes of that 15-minute range. So I want to make sure that that candle is solidified and closed and actually is giving me the information that I'm looking for. So I took this trade before it closed. I was anticipating it to close below the consequent encroachment, the new day opening gap. If it closed below the midpoint of that, that tells me the market's definitely weak and I'm going to sell it short. It didn't end up doing that, but I got in the trade before it did. So if this is the 10:30 candle and it's a 15-minute time frame, that 15-minute range is going to close at 10:44, and I took the trade at 10:43. So you can see that I took that sell before I had confirmation on the 15-minute time frame. Okay. Took the obvious gap. Stop loss is going to be above the mean threshold of the order block, and this was just really fucking stupid. Okay. It played out for almost 70 handles in my favor. I was targeting this candle's low because I note, just from things that I've seen over and over again, that usually when candles open with no lower wick, sometimes the market tends to draw back to that level. There's no lower wick like that. This is also in congruence with a clear and obvious gap on the 5-minute time frame that I thought if the market were to continue higher, like regardless of if it was bullish or bearish, I thought the market would drop down into this gap to rebalance the range if it was bullish, or if it was bearish, ideally it would just roll through it, right? But I thought this was a good area for the market to want to draw to. Now it came 8 handles shy of that and then reversed. I should have moved my stop to break even. I didn't. I did something really fucking stupid. I was sitting on a call with another trader, just trying to get my mind off of this trade and just letting it play out like I did yesterday, because yesterday is exactly how I want to trade. That's exactly what I want to grow into. So I placed this short on. I have conviction in the market delivering this level. I was sitting here on the 1-minute time frame, doubting it, looking at this and looking at that, and like, oh no, is it going to go higher? Is it going to go lower? So hopped on a call with another trader, just chopped it up with him. That basically took my mind off the trade in its entirety. I knew that this was wrong based on how the 15-minute candle closed, right? Because if the market trades down on a down candle into this gap, respected the gap, and then the following candle, large up candle that overlaps a down candle, that's not bearish. That doesn't tell me if the market makes this kind of print that overlaps these two down candles after rebalancing the range and touching that gap, it hit equilibrium of the range perfectly. If it does this kind of thing right here, that's not bearish at all. That tells me the idea is dead, but I kept it on just out of the hope that this trade would work out, even though it gave me everything that told me it was not going to work out. I ended up stopping out on that as well, which did not make any sense. I have a rule that says never let a 50-point winner turn into a loser. The only reason I did was because I didn't want to give up on this trade. I still clung on to the hope, the idea that this was going to play out in my favor. I knew this idea was dead from this large up candle right here. That's not good. I don't want to see that at all. Look how high resistance it is, how overlapping, how slow, how much of a hard time it has trading lower. That tells me this is not the real move, which is basically what I used for my higher time frame analysis today, because if we look at Thursday's range, it's very high resistance. We can see a lot of overlap, right? That means the market struggled to trade lower. If it's struggling to trade lower, that tells me that going lower is not the real move. It's not the real intention behind what the market is trying to do. And you can see the difference in the high resistance delivery versus the low resistance delivery. On the left side of the curve, a lot of overlap, right? On the right side of the curve, a lot of separation, a lot of clean movement, a lot of gaps. Low resistance, high resistance. High resistance indicates that's not the real move. Low resistance indicates it is the real move. So there you have it. Those are the mistakes that I made today. So I got so frustrated after today's session, but yet again, I was able to keep myself in a high frequency state of mind and reflect on the session. Today's session drove me to a point of frustration where I was like, okay, I keep making the same mistakes. It's the same few things that I repeat over and over and over again. That is leading to these losing trades over and over and over again. So I had to do a little bit of a mind dump. See if I can find it, right? Transcend frustration. How will I always hold my How will I always hold myself back as the operator of the optimal intraday swing model? So I'm just giving my model a name because it's fun. It's fun to just give something you create a name, right? Just have fun with it. Just play around with it. So I call it the optimal intraday swing model. Fuck it. Why not? It's mine. I created it. The main constraints with me: improperly framing market approach, not blending higher time frame narrative and market criteria. Try to perform the optimal intraday swing model on days that is not applicable based on day of week and economic calendar. Frame a split approach that will always lead to the indecision intraday. Cannot confidently get on side with moves when I miss the reversal. And then fade the optimal intraday swing model when I'm not able to get on side with it. Which these two were the issue today. And just a little bit of this. I mean, I got it right. It was just the wrong playbook. And because I noted the wrong playbook, I wasn't expecting that move at 9:30, and that's what I did. I wanted to drop down. I didn't do that because I thought this was presenting a different playbook. But what happened today, is 100% my model. I was just not able to get on side with it because I thought it was a different form of my model. I thought it was a different playbook. So, there's a mistake from today. Not the optimal way to end the week. Now, moving forward, what do I need to do? Well, number one, I need to eliminate the days where I know the optimal intraday swing model is not going to set up. For example, Monday with no driver. This day, boom, boom, should be crossed out in its entirety. This day, I actually framed a narrative that made sense with the market criteria to support that. I took the long. It didn't play out. That's fine. That's a good losing day. Wednesday, I framed an entirely wrong higher time frame narrative, and that led to 2 losing shorts intraday. The thing is I knew my idea was definitely incorrect. The conditions were also challenging. This week was just rough. I framed the incorrect idea. Conditions were challenging, and I got fucked twice. Thursday, I knew the market criteria was setting up as bearish, right? This is my bearish playbook. First trade I took, long stopped out. Reflected on that loss, allowed myself to recover from that loss, and then followed that up with the short that was actually my model. Very solid trade. And then obviously today, what happened today. So not the ideal way to end the week. 11% trade win rate this week. There's a lot of trades that I should not be taking at all. So I know that I'm messing up the statistical edge of my model by adding in all these extra variables, those extra variables being the mistakes that I'm making. Me, myself, as the operator of the model, I am affecting its ability to return profitability over the long run because I keep making these same mistakes. So there's constraints within me that I have to eliminate, which are the same things that I keep doing over and over and over and over again, which you've seen if you are consistent keeping up with these videos. Gotta make a change. Something has to change. And on top of that, I'm just going to keep consistently studying the optimal intraday swing model until I get very comfortable with it, extremely comfortable with it, extremely good with it, and eventually I will work out all these mistakes and I will know how to operate the model as the operator. That's kind of the mindset that I want. That's just how I'm thinking of it. Like, I am the operator of this model. This is the model, okay? This is the model that I've created. It has a statistical edge. It yields profitability over the long term if me as an operator can execute it properly. Me as an operator, I'm human. That human element is going to be put into that, which is going to lead to some mistakes, which are going to impact model's statistical edge. I like that mindset. Be the operator, be the good operator of that model. Eliminate human error as much as you possibly can. Run like an algorithm, run like a machine. So that's going to be it for this one. I'll be back at it again. I might drop some raw form of content tomorrow. Let's look at the economic calendar and see where we're at. I'm not going to trade Monday 100%. I'm not trading Monday. Don't even fucking think about it. I'm not doing it. And then Tuesday I should be back. But I definitely want to make some kind of raw form of content this weekend. It won't be me on the charts. It'll probably be me doing something. I don't know. So it's going to be this one. Whoa. That's going to be it for this one. Appreciate you for tuning in. And I'll talk to you next time.